You guys are the best. We love you. Keep at it. Keep learning like this. It's going to make you a powerful investor. This is one of the most common questions we get. In my entire career, this has been one of the most common questions. When do you know to sell a stock? Should I sell? Are there further gains to come? That's why it's so great to get into this video and tell you guys, give you a refresher on all the different ways you can know if the stock you own is going higher or if it's about time to take some profits off the board. And this applies to stocks going down as well. You need to know when to sell as stocks decline in value. And as you'll see in this video, and we're going to go really quickly, you'll see that a lot of the things we talk about can apply to whether a stock is on the way down or the way up. Would you buy that stock again today, right now? If you had the money instead of the stock, do you still feel it's a good investment? Because if you're on the fence about it now, maybe it should be time to sell some of your holdings. And understand, nothing in this video is personalized trading advice for you. If you're ever getting stressed from the stock, if you're finding yourself laying awake in bed at 3 in the morning, worried about a stock, whether or not to sell that stock, then you maybe want to not invest at all, first of all, but you also don't want to own an investment that's giving you stress. This entire video was inspired by an email that we received yesterday from Julie P. I'd love to hear your thoughts on Permafix. I don't see anything that really justifies a massive run it's been on in the past 6 months. Would it be considered overvalued? Or is this just the beginning of an even bigger move to come? Thanks a lot for that email, Julie. You inspired us and reminded us to comment about this because it's been a while since I said anything about it. And there's a lot of ways you can know whether or not you should hold on or sell a part of your holdings or sell all your holdings. Basically, when do you take a profit? And how much profit do you take? Speaking of Permafix, this is a stock that we highlighted over a decade ago, and it was a tremendous performer. Now we're going for another run with it. We keep an eye on these things, and when the things feel like they're in the right position, when we feel like the stock is going to increase a lot in price, that's when we highlight it. And we then recently talked about it again. And it's been on a tremendous run lately. Here's a 1-year chart of Permafix. Here's a 10-year chart of Permafix. And from our buy opinion of the range of $5.29 to $5.62, since then, it's approximately doubled. And whenever you're investing in stocks, I always tell you, look at the trading volume. That is going to tell you so much more than the price activity. The top part of the chart, that's the price action. The lower part is the volume. How many people are involved in the trades? That's more important. It'll tell you more valuable insights. So you want to look at the volume of the stock that you're considering that maybe you should sell it. And if the stock is moving higher under a lot of trading volume, a good percentage compared more than their average trading volume, then that's confirming the move. It's showing you that there's a lot of confirmation among investors that that is a lasting move, a move that could have a little bit of power behind it, a little bit of momentum behind it. But if a stock is going higher on very low trading volume compared to its average trading volume, then you shouldn't put as much stake in that move or that price increase. And it's very likely to reverse and come back. And the thing is too, it's very important to think about it in terms of a short-term and a long-term time frame. For example, the stock we were talking about, Permafix, in the short term, it's been doing so well lately that, yeah, there's going to be profit takers. And the higher the price goes, that's more people who are in a profit position and people who have greater gains. So some of them are going to sell some of the gains just because the price has moved so far, so quickly. The speed of the move matters as well. So if the stock goes up very quickly to a higher price, there's going to be a lot of profit takers who say, wow, I just made a lot of money quickly, and they sell their shares. Generally, those people are selling too soon if the stock keeps going, but that's sort of what the question is. That's the name of the game. It also shows you the commitment of traders. When the volume is really heavy, that means that, again, there's more momentum behind the move, and the traders are believing that the shares are going to go higher, and so they're buying more. There's at least a portion of new investors and some of the current investors who are saying, at the current price, even though it's higher, it's still a good value. Just like when I tell you don't average down, I tell you average up. The shares go higher, you buy more, and you feel it's still a good value. So there's a lot of commitment to traders you can see in the trading activity. And then watch the trends in the amount of trading volume. If the amount of trading volume is increasing from day to day to day, it keeps on increasing, that's going to mean that the stock price is going to go a lot higher. Unless there's something bad that happens, there's a huge washout and everybody sells at once, that's when you see the stock come down dramatically in one day or 2 days or 3 days. But if you see a building trading activity over more than a week and it continues, then that means that's a strong commitment of traders. There's more people buying more, a lot of people with their eyes on the stock. And so you may want to consider holding your shares as they produce more and more gains, especially if the trading activity is increasing and is very high compared to the average. But at the same time, the share price is neither increasing dramatically or decreasing dramatically. There's just more and more volume. What's happening is that that's a turnover of the shareholder base. There's people who want out of the stock, and that's being met by an equivalent number or more of buyers. A lot of people who are just getting into the stock. And when an investor is new in a stock, they are generally buying that stock expecting it to go higher. So until it does, they're not going to sell their shares. So if you see this turnover of shareholders on a week-to-week, month-to-month basis, and it's a good portion of how many shares are out there. You have 10 million shares out there and 100,000 are changing hands every day. That's a percentage, a huge percentage of stock that's held now by newer and newer investors because the share price stayed horizontal, stayed around the same price in the same range while the shares just turned over, while the shareholder base turns over. You're getting a stronger setup for the share price to increase a lot because there's not going to be a lot of selling. And when the shareholder turnover finishes and there's more buyers and the sellers are exhausted, they're out, they all sell their shares and their shares get bought up and they're gone. Once the sellers leave, that demand, that confidence in the stock among shareholders and people on the sidelines means that the stock is very likely to go higher from this point. Of course, your view of the industry trends is going to come into play. If you believe the industry itself is on a downswing, then take that into consideration as well. If you're owning shares of a stock that's doing really well, you want to know whether or not to sell it. You watch the industry, and if you believe the industry is going to keep on growing, or if the company, the underlying company, has a growing market share in that industry, then it's less likely that you're going to want to sell those shares. Although the industry can go one way and the stock or the company the other, but this is just part of all the things you have to look at and consider. Take all of these things into consideration. Everything, every move, every trade you make is a recipe. You don't say, okay, if the RSI is low, then we got to buy that stock. Sometimes that works, but there's so many other things going on at once. If you want to get into short swing trades, there's no better way to do it than Japanese candlestick trading charts. And the best course for that is the one that I built for you guys. It's not a coincidence. I've got the books, I've got a course about the Peter Leeds Academy, I've got the candlestick trading chart course. So there's technicals, fundamentals, basic learning, and the newsletter that we do all the work for you. All of that is not by accident. It's a whole package. Whatever you want to learn, you can learn each piece. And you know that I always tell you to scale in when you're buying shares of a stock. You have $1,000. You don't go, okay, I like that stock, throw $1,000 in. If all you had was $1,000, maybe you do $300 and wait a little while and decide if you want to put more money into it. But on the flip side of that, you can also scale out, and you should scale out in my opinion. I don't know what you should do, but in my opinion, you should do that. And one thing that a lot of people like to do is if your stock starts going higher, cash out part of it. Sometimes if it doubles, triples, cash out your original investment and just let the rest ride. A lot of people do that. It's a really good way to enjoy your gains, take some of your profits off the table. More a lifestyle thing is if you need the money, especially if it's more important than having an investment. You got to get your kid braces or pay your rent, buy groceries. Then you should consider selling the stock if you need the money. The best way to do it is through technical analysis. You can look at things like the relative strength index, the on-balance volume, the momentum indicators, breakouts. For example, if there's a resistance level at $4 and the stock's bouncing off $4 and it finally breaks through and it breaks out and goes higher, give it at least a day or two after it breaks through so that you can trust that move. But a breakout is generally preceding a much stronger short-term move. Relative strength, or the RSI, is going to tell you if a stock is oversold or overbought. And if a stock is oversold, it means it's probably a great value in terms of investor activity. And if it's overbought, it means that people are getting too caught up in buying up these shares and it's overvalued at that point. It's an oscillator, meaning that it'll go between 0 and 100, not below 0, not above 100. But the lower it gets towards 0, the more oversold the stock is. And all this stuff is very easy to see online. And I also like to watch when the RSI gets above 80, not just 70, but 80. Because a lot of stocks will get to 70 and you say, okay, it's oversold, I got to cash out on the shares. It can go up to 80 or 90 on the RSI. So in my opinion, what I do is I don't trust an RSI of 30 or an RSI of 70. I'm looking for 25 or lower, or I'm looking for 75 or higher. And what the RSI is doing is it's measuring the speed and the change of the price movements. And with that, you can tell a lot, and you combine that with everything else we talked about here today. For example, would you buy it today if you had the money and not the stock? Would you put that money into that stock? Look at the RSI. Try to go onto Yahoo Finance, wherever. Go look at the RSI. It's there, and you'll know if the stock you're thinking about is overbought or oversold. So go through all of this stuff with every stock. It's a recipe. You're basically making an answer. You're getting the information you need by taking a few of these steps. Try all of this with a stock you own or a stock you want to buy. Look at everything we talked about here today. And if you want to understand and get into Japanese candlestick trading charts, check out our course available through peterleeds.com. It's $249, and it's going to make a big difference for you. And you guys know everything that we sell is worth, in my opinion, tremendously more than we'd ever sell it for. Please subscribe, give us a like. It really helps us out a lot. You guys are the best. We love you. Keep at it. Keep learning like this. It's going to make you a powerful investor.